everybody, and welcome back to Ask Me Anything. Today I am joined with Archana Jain. Archana is a professor of finance at the Rochester Institute of Technology at Saunders College of Business. So, my first question is, what excites you the most about teaching finance to university students?
So teaching in general is exciting for me because of the way I get to interact with the students. I get to see them succeed. So once they graduate, I join them on LinkedIn, and it's very nice to see what they have accomplished over the years, and kind of knowing that we played a small part in it. It's interesting. So that's in general, but finance, because it's more applied, it's applicable to anyone, no matter what your major is and what your career path might be. But things like how to save for retirement, and what is the power of saving early, and how does a mortgage work when you buy the house or car. So those are very real life situations. So I think it's very interesting to learn finance or to teach finance in that sense.
Another question that I do have is, as a professor, do you notice a difference in the number of women in your classes? And if you do, how do you think we can encourage more women to study in finance?
So we do see a difference at Saunders College of Business, RIT, where I am. We used to have about 35% female student, but now the number is close to 45%. So that's good. And also, I think the way to engage female student is to start early. So we have a Women in Business Club, and then these students, they organize a conference, Women Leading in Business, where they go and talk to high school girls from grades 9 to 11 to tell them what are the different business career paths that you can take. They get to talk to the students who are in business college, and then industry professionals and so on. And also RIT, for example, any work setting, I think should have that we have a lot of resources to make sure that female faculty succeed. And I think seeing female professionals succeed in your area or in finance in general motivates other students. For example, it is motivating for me to see that we have a female dean at the business college, and also we have 3 department chairs, and one of them is female. So I think that's a good way to kind of engage them and show them what it looks like when there are people at the top, they're successful.
So another question is, we at Buyproperly are looking to empower women to feel more confident in investing. I know you were an active investor and have a diversified portfolio, and I was wondering if you could walk me through your experience with personal and family investing.
So again, diversification is the sort of key for us, for our family. So first thing we did is the retirement account. So you want to contribute the range. There's a minimum lower bound and upper bound. The minimum is how to get the maximum contribution from your employer. So for example, if I contribute 2, RIT will contribute 4, if I contribute 3, and so on. So for us, that's the key, that I want to contribute at least maximum where I can get the maximum contribution from my employer. But there is the upper bound where you have a pre-tax deduction for this contribution, but there is a limit to it. So in 2020, for example, here it's the amount 19,500. So again, 5% of my salary is the lower bound, and 19,500 would be the upper bound. So somewhere in that range, that's the first thing. And then we have some, of course, real estate investment, because again, we want to diversify, so exposure to a different asset class. We have our kids' education accounts. So again, New York State allows us to open an investment account for our kids' education, which is again a pre-tax deduction, so that's good. And then we say, okay, now let's see what else can we invest. And again, even within that, we have a diversified portfolio. So we are willing to take some risks. So we have, of course, some cryptocurrencies in there. And then we want this right now, we looked at companies which were hit by pandemic, and then they might come back after it is over. So for example, oil and airline industry. Then some companies which are kind of rising because of the pandemic, so that would be pharmaceutical, online education companies like that. So having a mix of those, sort of like looking at the economy right now and what will work. And if you don't know how to pick a company, you can always do sector investments. So you can have sector ETF of pharmaceutical sector, airline sector, and so on. And we also have a little bit of spider ETF, which is again diversified portfolio of 500 companies which are part of the S&P 500 index. So that's what we have.
So I guess another question is, what do you think is the biggest mistake people can make with their money?
Not investing. So I have friends who make decent amount of money and it's just sitting in the bank. And I try to kind of tell them the money works for you over time. Don't let it just sit in the bank. Try to, if you can have a passive source of income by the time you retire, that's great, right? Like have real estate, few of them, and get the rental income. But if not that, at least invest in something, because bank is not giving you a significant interest anyways. And if you are not willing to take the risk, then still invest in a diversified portfolio, buy index funds, sector funds, and have an emergency fund if you're worried about that, so you can have liquidity. So again, not investing is one of the most common mistake I have seen amongst some of my friends, and I would encourage them to invest in whatever they are comfortable in, but just invest something. And long-term investing, not talking about trading and speculating, but invest and forget kind of. That's what I tell them, that so even if you made a mistake, let's say you bought it at a high point, eventually after a few years it will pick up and will go up. So don't try to time the market, but invest in for long term.
So another question is, how do you think technology is impacting the way people invest today?
So that's very good because now everything is available on the internet, so it's very easy to find information. That's the first thing, that you can always look up what are the different asset classes, what are the new innovations in the investment industry, and who are the brokerage firms, what is the fee they're charging, and whatnot. So information is easily available, but again, the downside you should watch is who are you listening to. So do not trust just any information, but make sure that you're listening from an authentic source. So that's one. The other is, again, investment is easy nowadays. You can just open a brokerage account. You can do it on your phone. You don't necessarily need a laptop or a computer for doing that. Fractional investment is easy, which is something new. So for example, Robinhood would allow you to do fractional investments. So if you have $300 and the stock of Amazon is trading for 3,000, you can buy 1/10 of Amazon stock on that app. So that's something new. And also the recent thing is robo advisors. So Vanguard has this digital advisors. So from their past experiences, they have created this. Again, I don't understand all the details of it, but I think it's a computer program which will give you advice based on what's your risk appetite, where to invest with less human interaction. So that's something new, which is technology has provided us with different resources.
So just some questions to wrap up. What's one piece of advice you would give to your women university student?
Network. So that's the one key thing, that you should talk to as many people as you can, attend as many events as you can, and learn about investment, for example. So again, so networking in general, but then again, investing, because it's never too early to start thinking about your retirement. Sometimes when I teach this to students, they'll be like, well, I don't even have a job yet. What are you talking about? But that's just to have that in the back of your mind, that it's never too early. So I give them as classic example of if you had somebody invested $10 for you 200 years ago and the interest rate was 5%, that will become $500,000. Of course, we don't have 200 years, so we need to invest more than $10, but that shows that if you invested early on, even 10 would have been enough. So even starting a little bit as soon as you can is great, and be confident. So in general, we know that males are more confident than female when it comes to trading, and it is true in my household as well. So sometimes my husband does more trading and I'm more of a long-term investor, and then I keep checking what is going on and if it's too much exposure in one asset class, so things like that. So be aware, and invest and talk to people, network. Yep.
So I just mentioned advice for women university students. Is there any piece of advice you would give women who are actively investing in general?
So it's actually similar. So I mean, networking, maybe it's now limited because you're not in university anymore. But still, be aware of the investment. So either you do it yourself, or at least keep an eye on what is happening, who is investing for you, be it your partner or be it your financial advisor. Don't just let them do it blindly. So you learn the investment and learn the risk that you're taking. Understand what is your risk appetite, and do not worry, because like I said, if you keep investing for long term, even if you end up buying at a high time and you might lose a little once in a while, but eventually over the long run you should be fine. So that's what I would say.
Our last question that we have for you, do you have any recommendations on how to navigate the current market?
So similar to what I said, average costing. So for example, when the market went down in March, people were waiting for it to come back, go down furthermore, but that didn't happen. So if you kept investing a little bit every month, you would have still gotten something at a low price and you would have a good return by now. But if you kept waiting, well, I think the market is going to go down some more and that's when I will invest. Then you have lost the opportunity already. So do not really try to time the market. If you're a long-term investor, then investing a little bit every month will average out your cost. And again, diversify your portfolio. And like I was saying, how my portfolio is looking at some companies which were hit by pandemic, and I think they're going to do well later on when the pandemic is over, and some where there is new opportunities because of pandemic. So that's called sort of sector rotation. So depending on the current economy, you choose sectors which might do well. And again, if you're not comfortable with that, just going by ETFs or a little bit exposure to even S&P 500 is fine, but just keep investing a little bit every month is what I would say.
Thank you for joining us, Archana.
You're welcome.
If you enjoyed this Ask Me Anything and want to learn more about women in investing, join us in our upcoming webinar titled Invest Like a Woman, happening on Thursday, October 29th at 11 a.m. Eastern. You can sign up on Eventbrite, and the link is in the description. We hope to see you there.